tested out 2 different investing strategies over the course of a month. I'll be betting $1,000 on each strategy to find the best investing strategy for not only 2022, but for all time. Trust me, you're not gonna wanna miss this. Let's go. So the very first strategy we're going to test out is something called DCA, also known as dollar cost averaging, probably one of the easiest strategies to follow. With this, I have set up an automatic purchase plan on Coinbase to take $250 from my bank account every Friday. And I will be using that money to purchase 4 of our favorite cryptos, that being Polkadot, Matic, Ethereum Classic, and Solana. So what exactly is our second strategy? Well guys, for the second strategy, we'll be incrementally increasing our position on a crypto related stock, just the same as the first strategy. However, instead of buying every Friday or every Monday or whenever, we're going to only buy when our indicators actually tell us to buy. With that being said, our first purchases went through for week 1. Let's hope for some gains. So week 2 came around, and with our luck, our buddy Powell decided to tell everyone, well, more pain is on the way, which was not nice for the portfolio whatsoever. But hey, on the plus side, we got to pick up some more crypto at a cheaper price. So during this same week, our indicators flashed a buy signal. So we went ahead and put a fat $500 on a crypto mining stock with the ticker MARA. So taking a quick pause on the stocks, we gotta go ahead and actually head out to do something really quick, and then we'll be back. Alright guys, so just finished moving a bunch of snow around. Let's go ahead and get back to the stocks. Week 3 brought more pain and therefore a lower cost per coin, but overall nothing really changed until week 4. Now in week 4, things started to really pick up. Well guys, we experienced quite the pump, almost to the point where everything we bought was pretty much break even or profit. Furthermore, our indicators actually flashed a sell signal, and thus I decided to end the challenge right here. So what are the final results? Well, after fees, we made a grand total of $42 on the weekly purchases, aka the DCH strategy. And for the indicators, we made a grand total of $6.97. However, that isn't a very fair assessment at all, because we only got to invest $500 into our indicator strategy compared to the $750 that went into DCA. As well, the fees for the indicator strategy actually costed $10 per trade. So basically, anytime that we sold or bought, we had to pay an extra $10. So theoretically, we made $26.97. Now in comparison with the dollar cost averaging strategy, it cost us about $3 or so per trade. So not as much as the indicator strategy. So what's the verdict here? Well guys, I would suggest pulling aspects from each investing strategy and taking both aspects and combining it to make one cohesive investing strategy. Now obviously that is not financial advice whatsoever, but personally what I do is I take TA and I mix it together with dollar cost averaging. So essentially, instead of trading it and selling it off and risking the market going up more, instead I just go ahead and actually purchase more of these good companies and continuously just average down as the price goes down during this bear market. Now how I see it is investing without TA is essentially investing blind. Now with TA, no matter what you do, you won't get 100% accuracy, but what it will allow you to do is actually more carefully invest your money so that you guys can actually get more bang for your buck. Because as they always say, time in the market beats timing the market. But why not have both? Not sure if that made any sense, but hey, if you guys want to go ahead and check out what type of TA I use, video will be right here once this video hits 25 likes.